Let's continue our discussion on life insurance. Takes a couple times because putting it all together, there's a lot to cover there. I mean, life insurance, for gosh sakes, what an industry. So we last talked about, are you getting the appropriate cover for yourself? Is it adequate and is it cost effective? But what are the new types of insurance? It's an evolving industry. We've heard of term all our life. That's where basically you rent some coverage for a period of time. Then people have asked me, this is thousands of times I've been asked, is it term or is it whole life? Well, the new types of insurance say a whole life has been there forever. That's a cash type insurance, but we call that, it's either term or permanent, technically. Permanent, meaning you can keep the coverage for the rest of your life. It'll pay at death, depending on how you want to structure the premiums. So the new types of insurance take the whole life concept, which is cash inside an insurance and a level premium for life, and they've come out and made it an adjustable life and a flexible premium. And that was termed, when it came out, universal life. And then they started putting stock indexes in there, all different types of mutual funds, and that's become variable life. And I'm not talking about good or bad or sideways, just there it is. And then there's indexed universal life. It's a universal chassis with a tie-in to various indexes of the stock market, like S&P 500 or Barclays. These are indexes. So term or whole life, which should you have? The answer is yes. Yes. It's not a correct answer for that one size fits all that these talking heads talk about on TV and the radio. It just ain't like that. It's not one or the other. If you study it thoroughly, you probably end up owning both. And I'm going to cover this tomorrow. We're going to be a little heavier, but I'm going to talk to you about the best way to own your coverage. I said own, O-W-N. How do you own it personally or not? Maybe there's a better way, and we will discuss that. But one very, very important thing is check those beneficiaries. I've talked to a lady that recently, and I might have mentioned this on that because, I mean, it is recent in my mind. Her mother, she's 69 years old now, and her mother is her beneficiary. Interesting, isn't it? Yet she's got a son. And her mother's been dead for 6 years, I think she said. She's still the beneficiary of her life insurance and of her 401k plan. Interesting. Check your beneficiaries. Then you're talking about reaching out. The concepts go so far with life insurance. They have a way to buy it now called premium finance. You actually finance the premium to pay for your policies. These are not recommendations, they're just observations. There's something out there called BOLI, bank-owned life insurance. And yes, banks like to own this stuff, own their key employees and build up the cash reserve. There's corporate-owned life insurance, which is the same thing. Corporation owns life insurance. And they have such things as key man. There's supplemental retirement income that's marketed using a cash type insurance. It's pretty widespread, and then there are ways to own it in welfare benefit plans, such as these aren't current, but the tax code was allowing things in what we call the 412, 412E3s, 419s, different ways to buy life insurance and get some tax breaks. IRS is tightening down on that. Tomorrow, though, I'm going to tell you about the powerful tandem. I'm actually going to read you off a list of things, and it'll make you wonder, why haven't I owned this forever if it's this good? But again, you get to choose. There are a lot of different type of investments out there. Maybe we need sum of several. Okay, see you tomorrow.